Casey, I think there's a national trend going on that you and I should just acknowledge. I think there is a lot of folks that are saying and or thinking or both the following statement. Michael, Casey, I'm waiting for rates to go down. What do you think when you hear that? I'm waiting for rates to go down.
I mean, man, wouldn't it be nice, if rates were better? But what does that actually mean? Because first of all, you and everyone else are waiting for rates to go down.
Yeah.
So, and with low supply, right? People haven't bought for years. Okay. What do you think is going to happen when rates go down? Well, we're going to be right back where we were last year, last spring, with multiple offers, over asking, prices soaring through the roof. That's my opinion of what's going to happen. As soon as rates, every time they get a tick down, just everyone's like, I'm buying. So yeah, go ahead and wait for rates to go down. You'll be back to no inspection contingencies, waiving all your rights, scraping up all cash offers, looking for hard money loans, and buying properties that you really didn't have time to investigate properly because you're just trying to get something because everything is getting sold. That's what's going to happen when rates go down. So I have one student who was telling me the other day, she's like, Casey, I got to get something. I'm worried. She's opposite. When rates go down, it's going to be a buying frenzy and I'm not going to get anything. I'd rather get a higher rate now and buy my rate down or cash out, do a refinance later. But I want to get something now where I can be a little bit choosy and I can do my own inspections and I don't have as much competition and I can get seller credits, you know.
Yeah.
So
Yeah. It's really funny because there's a couple of things going on. One, today, affordability is really bad. Affordability is a combination of price, rates, and wages. It's bad. In fact, it's the second worst I've seen in 50 years. The only year being worse was 1981. So it's bad. It's really, really bad. There's a lot of people that are right on the edge. And what we've actually seen this movie. If you go back and watch some of my real estate agents like Beth, Omar, and Adrian, they told you what happened. Last year, when rates spiked to 7% the first time, which I think was August, everything slowed down. Then rates went down to 5.99. Everything went nuts. Then rates went back up to 7 and things are slowing down, but not as much. The second time you get to 7%, it's not as shocking as the first time. But here's the deal. We get back down to 599 again. We're just going to unlock all of this demand. The marginal buyer is going to come in like, I don't know, a swarm of bees or whatever swarms. And there's still no supply. But the crazy thing about this, and I thought it was so well written. I wish I can give credit to the author that said this. I've said the housing market is broken. Lots of experts have talked about affordability or demand being broken. The real magic in understanding is the Fed broke supply. The Fed has destroyed more supply than demand. And that's because of interest rate lock-in. I mean, just think about that. We've had new listings down 30% week on week for a while or year on year, but for each week, active inventory seems to be declining. Casey, we drop rates a point. If interest rates drop a point, that means the best of the best are dropping a point and a half. I think your student is right. It's going to get nuts again.
yeah,
Ugh.
it's gonna get nuts.
So what do you tell it? What do you want somebody to hear? Casey, Michael, I'm waiting for rates to go down. What do you want to tell them right here? Just you to them.
I want to say rates don't really matter. What you're buying is a cash flowing property. You can change the cash flow with a different interest rate. You can put more money down. Okay. That some people don't advise you to do that. Some people do. Start putting 30% down. Okay. If you want to, it's equity. If you're putting your hard-earned savings in an inflation resistant asset, better than sitting in your bank account. So there's things you could do. You could put a little more money down. You could get seller credits to buy the seller itself can give you some money to get a lower rate and it won't come out of your pocket. You could also buy your own rate down a little bit. Either you're going to buy it down now or you're going to refinance later. So you're going to pay for the rate change eventually. Do you want it to be now or later? And later is not guaranteed. My parents bought their house in the 90s with a VA loan and it was like, I don't know, 12 to 14% interest rate. So, I mean, who knows? Like, it won't happen, next year, years to go. We might see double digit interest rates. So I am buying my rate down today to something that I'm comfortable with. So buy the rate down. It's not a huge deal. When you're buying something that's under $200,000, that rate buy down is pretty cheap. It's not a lot of money. Now, yes, talking about buying down $1 million rate, okay, that's getting expensive. But just for a small, $150,000 rent property, buying a rate down on something in the 6% range that you might be comfortable with to help it cash flow, that's easy. That's what you should do. So don't let rates scare you. They're temporary, they change. And one day your house or your investment property will be paid off and you won't be paying the bank. The goal is not to, in my opinion, the goal is not to leverage your whole life away and always and always have a 30-year mortgage because you're always refinancing. That's not the goal for me. Let's get the thing paid off eventually. Use the equity, sure, while you're young, but then whenever that ends for you, get them paid off, enjoy the cash flow at the low risk.
I couldn't agree more. The thing I would tell someone is run the numbers with the rate you have today because you don't know will be tomorrow. If you close with 30-year fixed rate money, because then you know the worst case scenario. The only time you'll refi is to get better. So again, control the controllables, and that is with 30-year fixed rate debt. Casey, where can people find you?
People can find me on everywhere, brickbybrickwealth.com, Instagram, Twitter, YouTube. What's left? TikTok. I forget about TikTok. I even post on TikTok and my website, brickbybrickwealth.com.
Thank you so much. If you follow her on one of those, send her a note, tell her you came from one rental at a time so she knows that her time here weekly is worth it. Thanks, Casey.